Hello, everyone. My name is Blago, and I'm the founder and CEO of Modeliks, a business planning and reporting software for small businesses and startups. I've joined here today with my co-founder and chief product officer of Modeliks, Nick. So, Nick, what is our topic for today?
Hey everyone, nice to meet you all. So today our topic is that we will talk about how to create a professional investor-ready financial plan for a SaaS business in less than 30 minutes.
Oh, Nick, it's not possible to create it in 30 minutes. I've been creating financial models for the past 20 years, and it usually takes me weeks to create a proper financial model in Excel. And I'm really good at it.
Well, this is why we created Modeliks, to make it possible.
All right, let's see. So, before we jump into actually creating financial models, let's quickly talk about two things. One, what is a professional financial model? And two, why every company needs one. Now, a financial model is a tool used to forecast the future financial performance of a business. A high quality financial model is based on the most important assumptions that have the highest impact on your business. Now, these assumptions are also called value drivers because they drive your business. Now, examples of value drivers for a SaaS business include things like customer growth rate, churn rate, subscription prices, customer acquisition cost, conversion rate, and so on. And we'll get to this level of detail in a bit. But before that, let's talk about the second question. And why is it important to have a well thought through professional financial model? Well, because it helps you understand how your business will likely perform in the future. It also helps you set targets for your team and track your progress against that plan. And now, if you're raising funds, a financial model becomes even more critical because it helps you show your potential investors that you really understand your business. What are the critical aspects that you need to manage, i.e. the value drivers, and that you will likely have control over your finances in the future. The alternative, a bad financial model, will just quickly lose your potential investors. So without further ado, let's jump into Modeliks and see how we can create a professional, powerful financial model for SaaS business in less than 30 minutes. This is Modeliks. And the forecast window that you see here on top, the forecast module, is where you create your financial plan. In order to create a professional financial plan within Modeliks, you would have to go through these 8 tabs here and provide assumptions and information about each one of them. This is revenues, cost of goods sold, employees, expenses, assets, financing, taxes, and working capital. And once you've provided information about these eight tabs, you go to your report section. And here you can see your automatically calculated financial statements and other reports about your financial plan, including profit and loss, balance sheet, cash flow, employee schedules, other charts, and in this case, a full SaaS dashboard to sense check the quality of your financial plan. We'll come to this later. Let's now start from the beginning. Let's go to revenues. Now, here, what you can see is that we already have 2 revenue streams defined. One is subscription revenue and professional service. And usually every SaaS business will have at least one revenue stream, which is subscription revenue, SaaS business. And some of them will have the second revenue stream, which is professional services, if they provide additional service, for example, implementation fees for implementing their software to clients. Now, the reason why you see already these 2 revenue streams defined in Modeliks is because when you first log into Modeliks, one of the first things that you will be asked is what is your industry? You will say SaaS. And then it will ask you whether you want to start with a predefined financial model template. And if you say yes, then the full financial model with all the logic and all interconnections for a SaaS business will be loaded up for you so that you don't have to define the model. You just need to input data for your specific business. This cuts out 90% of the time for creating a financial model. It usually takes weeks to build a financial model. With the predefined financial template for SaaS in Modeliks, you can do it in, well, let's see, less than half an hour. So let's start. Let's start with subscription revenue. In order to define your subscription revenue, we will click here on the edit button to go inside the subscription revenue stream. The name of the subscription revenue stream is subscription revenue. And then we have defined four subscription plans for our demo business here. We have two plans, standard and premium, with a monthly subscription, and standard premium with an annual subscription. You can add, delete, change the duration of the plan. For the purpose of this demo, we have these four plans. So we click next. Now there are four things you need to define in order to calculate your subscription revenue. One is the number of signups or the number of new customers that your business will get over time. Number two, your churn rates. Number three, your refunds, if you provide any refunds to your customers. And number four, your subscription prices for your subscription plan. But let's start with signups. Now, signups, as I said, is the number of new customers that you will acquire. Let's say that we will acquire 1,000 customers the first month, then 1,200 customers the next month. And well, let's just say we're going to keep acquiring 1,200 customers per month going forward in the future. Now that we have defined the number of customers, this is the total number of new customers. We need to provide a breakdown per subscription plan because we want to calculate the revenues and all the KPIs based on subscription plan. So we have defined 4 subscription plans. Let's provide the percentage breakdown of the total signups. Let's say we have 30% of the signups will be in standard, 30 in premium 1 month, 20% in standard annual plan, and 20% in premium annual plan. Now, if you want to go into more detail, provide different breakdowns for different periods of time per month and per year, you can do that. You click on this button here, enter breakdown per month, and you can do that. For the purposes of this demo, let's keep it simple. We'll just say this is the breakdown for all times in the future, for all periods in the future. Now, the final thing is customers at start. If you're just starting out, you have 0 customers, there's 0 there. If you're already an existing SaaS business, you would have some customers that at the start of the forecasting period. So let's say we have 1,000 customers here, 500 in this plan. We have 400 in this plan, and then 100 in the premium yearly plan. Now with that, we have defined the number of new customers and their split. We go next. We need to define the churn rates. Churn rate per plan. Let's say we will have a 15% churn rate, monthly churn rate. 50% churn rate for the first plan. We have a 10% for the second plan. For the annual plans, let's say we have 5% churn rate and 5% churn rate. Again, you want to provide churn rates for different churn rates for different periods, you can do that. Let's keep it simple here, and we'll just provide 1 churn rate per plan over time. Next is the refund percentage. This is the percentage of signups that will require refund if you give refunds to your customers. Let's say that you expect about 5% of your new customers to request a refund. We'll put that in there, and then we click next. We need to define the subscription prices per subscription plan. Say it's $50 for the standard plan, $100 for the premium, $500 for the standard annual plan, and $1,000 for the premium annual plan. Again, you want to put in prices, different prices over time, you can do that. We are keeping it simple here. So that's it. We click Save and Close. And now our subscription revenue is automatically calculated. Here it is, starts with 178,000.
That was very easy.
That's the point. That's the whole point. Make it easy and correct and accurate. So that's the first revenue stream. Let's look at the second revenue stream, professional services. We said this is for providing implementation services for clients. Let's go into edit mode for this revenue stream. We go next. Now here, the way we need to define the number of clients that we are gonna provide implementation services and the price per client, the amount of money each client will pay. So the number of clients, we don't want to just input the numbers. We want to connect them to the actual number of new clients that we are going to get through the subscription revenue stream. So we have built a formula. We will say the total number of clients for professional services will equal to the number of new clients, subscription clients, times the percent of those new clients that will require implementation service. Yes. So our signups, our new customers are automatically pulled from the subscription revenue stream, and let's say that 30% of them will require implementation services. We can copy paste. We can just input the numbers 30 all the way to the end. We can copy paste numbers, or if we don't expect this number to change to the end, we just press this arrow here. It will ask us if we want to copy the values to the end. We say yes, and then they're copied all the way to the end. So now we've defined the number of clients for professional services as new customers times percent of customers that require that service. Now let's define the price per client. Let's say that we will charge $300 each client for implementation service. And let's say that this number will not change in the future. So it's $300 for all periods. We click Save and Close. And that's it. Now we have calculated our revenue streams and our total revenue for our business. 268,000 the first month, going all the way up to 800,000 the last month, and then 7 million to 24 million on annual basis. Now, let's go next. We go into cost of goods sold. Now, what are cost of goods sold? Cost of goods sold are the direct costs that are required, that your business requires in order to provide the services to your clients. And usually a SaaS business would have minimum of three specific direct costs. There might be more for more complex businesses. Number one is IT and hosting infrastructure. These are your servers, your bandwidth, everything around your IT infrastructure that you require for your SaaS business. Then there's payment processing. Most of the time we would charge our clients by credit card, and there are credit card payment processing fees for that. And the last direct cost is customer support. This is your customer support team that is required in order to provide your service to your clients. So let's look at quickly IT and hosting costs. We go into edit. Now, the way we've defined this cost is as a percentage of the total revenue. We go next, and we see that we need to specify what percent of the total revenue will go into IT costs. It's also possible to just say, you know what, this is going to be a fixed number. I'm going to pay $1,000 per month for IT infrastructure. But here we've decided we're going to go with percentage of revenue. So let's say that 7% of your revenue is going to go into IT infrastructure. Let's say that's not going to change over time, or maybe it will reduce. Let's say it's going to 6, 5, 4, and 3% over time. It will reduce as our revenues grow. So then we click Save and Close, and our IT costs have been calculated. Now, the other two expenses, direct expenses, which was payment processing and direct labor. These direct labor is calculated in employees. Direct payment processing is calculated in the expenses tab. So let's jump over there and see how that is done. If you go into employees, now before we jump into one by one, every SaaS business would roughly have this type of employees that you should be thinking about. You would have your customer support, you would have your CMO, your chief marketing officer, your sales team, your account management team, your marketing staff. Then you have your product management, you have engineers, Q&A, and your CTO, and then you have a CEO and an office office support staff. Some businesses, small businesses will have less. Some businesses, more complex SaaS businesses, will have more positions. You can add and delete as many positions as you want in Modeliks. For our example, let's go with these positions. So customer support. Now, this is really the power of a professional, well-done financial model. You want to connect your customer support cost to the number of customers that you have, because the more customers you have, the more customer support people you need. So those two need to be connected. How do we do that? That's already predefined in the Modeliks SaaS template. The way you do it is, let's go next. And let's see. Now, we need to define the number of employees. We have defined here with the formula the number of employees that is equal to the number of tickets, customer support tickets that the company will get, divided by the capacity that one customer support agent, the number of tickets that one customer support agent can handle. Yeah. So based on the number of total support tickets and this capacity, we will calculate the number of employees that we need. However, to calculate the number of support tickets, here, number of support tickets really depends on the number of customers that we have. So we've set a formula where the number of support tickets is equal to the total number of customers for each period, multiplied by the percent of customers that will require customer support, multiplied by the support tickets that each of these customers will submit. So the number of customers at the end of the period is already automatically pulled from the revenue stream because that's where we defined it. Now, percent of customers contacting support, we've put in here 20, you can put in whatever, you can say, let's say 30% of my customers will require customer support. And each one of them will require 3 customer support tickets. Require 3 customer support tickets. So based on these inputs, we've calculated that the total number of customer support tickets our company will have to handle is right there. Now, if you go back to the number of employees, now the customer support tickets are calculated. Now we just need to input the capacity per agent. How many tickets can one agent handle? So let's say that one customer support agent can handle 800 customer support tickets. And let's say that this doesn't change over time, 800 tickets per month. We put that in, that 9,600 per year. And now the number of customer support employees has been automatically calculated and automatically linked to the total number of customers that we have in our financial model. And then finally, we just need to define the cost per employee. And let's say that one customer support employee costs us a gross salary of $3,000 per month. Let's say this is not going to change, $36,000 per year. And that's it. We click save and close. And now our customer support team cost, or the cost for the customer support team has been automatically calculated based on directly linked and based on the number of customers that our business has.
One question, Blago. Do we always need to go into this edit menu to input data for our employees?
No, we don't. Now let's look at the CMO, and that's a great question, Nick. It can go much faster actually in some cases. So let's look at the CMO. CMO, we always know it's Chief Marketing Officer. It's always one person. Yeah, it cannot be more. We don't need a calculation there. It's one person. If we just open here on the main employee screen, if we just open the CMO tab, we'll see one employee, and let's say his gross salary is going to be $6,000. Let's say it's not going to change over time. We're just going to do that, and boom, there it is. Our total cost for the CMO has been calculated. And in cases where you can do this from this main screen only when there are no formulas for calculating the number of employees for that specific type of role, and you can recognize whether you can make inputs if the color of the input of the cell is blue. Blue color, you can make inputs. Black color, you cannot make inputs. As simple as that. Now, if we continue, go with the sales reps. Now, how many sales reps do we need? Again, if we go into edit, again, this should depend on, we need to figure out how many employees we need and what is the cost per employee for the sales reps. Again, this will depend on the number of new customers that we get and how many customers can one sales rep handle. So, and that's the formula, number of total signups, total new customers, times percent of those new customers that require a touch point with the sales rep, divided by the sales rep quota. How many new customers should one sales rep bring on board? So signups or new customers directly pulled from revenue. What percent of signups require a sales rep? Let's say 80%. Let's say this doesn't change over time, and let's say that one sales rep can handle 100 new onboardings per month. You can change this to whatever number you want. Let's say it's 200, right? So change that, and boom, automatically your total number of sales reps, total number of employees has been calculated based on these drivers, based on the number of new customers that you need to onboard. The more customers you need to onboard, the more salespeople. Less salespeople. So it's all automatically linked. This is the power of a well thought through and linked financial model. And we go into cost per employee. Let's say that one sales rep costs 4,000. This doesn't change over time. And then we say save and close.
Here I have another question. So when I looked at the cost per employee, it said gross salary. Are we able to also account for social contributions or any other employee-related expenses?
Great question, Nick. Yes, this depends on different jurisdictions. So in some cases, in some jurisdictions, companies would have additional social contributions that they have to pay to the government or on top of the gross salary. So if this is the case in your country, the way to do that is you click this button here where it says burden rate. Yeah? And here it says, basically, you need to put in the percent of additional cost that your company needs to pay to the government on top of the gross salary. So Nick, you're from Germany. I believe in Germany, that percentage is 23%. Additional cost for the company on top of the gross salary. So you put in 23%, you click save, and now automatically, and if I open this up here, you will be able to see that there are additional employee benefits which are calculated on top of the gross salary.
Cool, thank you for explaining.
To help. And so on. Now we go into account management. Here, account manager, if we go into edit, here what we will see is that, there are, we want to calculate the number of account managers now based on the total number of customers. They are not salespeople. They need to take care of the existing customer base. So we have the total number of customers automatically, and we say the capacity per account manager, let's say it's 1,000 accounts that they can handle at any point of time. Save and close, and our total cost for account managers is calculated automatically. And so on. So we go on, we look at product management. Product management, we can see we want to have, let's say, 2 employees in product management. This is not going to change maybe for the first year. We're going to copy paste this to the end, but then we're going to say the next year this is going to change. Oh, not 56. We're going to put 5 and 6 people, and their salary is going to be $3,000. And this is not going to change over time. Then we have our engineers. I mean, this is just going to, for the sake of time, I'm going to do this quickly. Let's say this is 4 people, and then their salary is $5,000 per month. And then we have our Q&A. We will have 2 of these guys. We have very well automated our testing process, so we don't need too many of QA people. Let's say they cost $3,000 per month. Yeah. Then we have our CTO. Okay, this is always going to be 1 person. It's 1 employee times a salary, let's say, of $6,000 per month. And then we get to our CEO. Again, just 1 guy, one girl, 1 person at a salary of $6,000 per month. And then we have our office support staff, which again, let's say it's 2 people is what we need. So this is not going to change over time. You can put in different numbers over time, of course, if you expect growth in any of these positions. Let's say this $3,000 per month. And that's it. We have filled out the full, we have calculated the total employee costs for all the positions that we require for, see here we have account management is 0. And the reason is we missed something. So let's see, we defined the number of employees, but we did not define the cost per employee. So let's say this is $4,000 for an account executive. Save and close. And I also see that my marketing staff is 0, probably the same thing. So if I look at, we didn't define them. So number of employees, let's say we have 5 people in marketing, and we have $4,000 per employee gross salary. Now we have the total marketing, total employee cost calculated for our whole company. So let's move on to the next one, expenses. Now expenses, standard expenses that we have in SaaS. You have payment processing, as you said, this is direct expense that goes to cost of goods sold. Then you have paid marketing, you have affiliate fees, other sales expenses, and then some professional rent and utilities fees. And now let's look at some of the logic. So for payment processing, the way you want to calculate payment processing cost in SaaS is twofold. You would have fixed, the total payment processing is going to be the fixed transaction fees plus the variable transaction fees, because any provider that you use for your payment processing, they will charge you both a fixed and a variable fee. So fixed transaction fees depends on the total number of payment transactions that you do, and that's automatically calculated based on the revenue stream and the percent of transactions that we expect to be paid by card. Let's say 100% all our transactions are paid by card. Yes, and then the fixed transaction fixed fee per transaction usually is around half a dollar. So $0.50 fee right there. You click next. The variable transaction fees are based on the total cash collected by our payment processor. So our cash collections are automatically pulled from revenues. 100% of our transactions are credit card. And then the question is, how much is the variable fee per transaction? Usually this would range anywhere between 3.5% and 5%, depending on which provider you're using. Let's say 3.5% in our case here. Click save and close, and your payment processing fees are done. And automatically calculated based on the logic that a SaaS business operates under. Paid marketing, again, we can look at paid marketing. in paid marketing, what we have is the logic here is the total new customers times the percent of customers that come through paid marketing channels times the cost per new customer, the marketing cost per new customer. So new customers directly pulled from the revenue stream. Let's say that 20% of our customers are going to come through these paid channels, and we're going to say that a cost per sign up, marketing cost per sign up is $100. Click save and close, and there we have the marketing cost. And so on. That's the logic how the model works. Then we go into affiliate fees. Affiliate fees, these are money that we pay usually to influencers for bringing clients and traffic to us. And usually those are two types of affiliate fees that SaaS companies would pay. One is an affiliate fee, one-time affiliate fee per new customer. And the second type is affiliate fees as percentage of the cash collected from those customers that were brought in by the affiliate. So total affiliate fees will be equal to the affiliate fees per new customer, one-time fees plus the affiliate fees as percentage of cash collection. Let's go one by one. Per new customer, we have the formula, which is total new customers times percentage of customers that come through this type of affiliate times the one-time affiliate cost per new customer. New customers are directly pulled. Let's say that 10% of our new customers are going to come through this channel. And then let's say that the one-time affiliate fee per new customer is $100. We click save.
Add one question. Is it possible that I could also let the fee grow? That I don't want to enter it absolutely, but want to order a fixed fee for the affiliate?
Absolutely, Nick. So let's go back into edit of affiliates. Yeah. And then if I go affiliate fee per new customer, right? So you want this affiliate fee to grow, right? This $100. So if you want it to grow by a specific percentage, you click this button here, which says % growth. Then what it tells you, it opens a new table here, which says, when are you going to start to incur this cost? Well, from the first month. What is the value? $100 in the first month. And then what is the percentage growth that you want to apply to this number over time? So let's assume that for the first year, we have 0% growth. We expect our affiliate fees to stay at $100 per sign up. But then every year afterwards, we expect 10% growth in the affiliate fee per sign up. When I input that growth rate in there, our total affiliate cost per month and per year is automatically calculated based on those growth rates.
Cool.
Yeah. So we click save and close, or actually, yes, we click save and close, and we go to the next. Now, affiliate fees are done. We go to, let's see what is next. Other sales expenses. Other sales expenses here, if you go into edit, we have defined them as a % of total revenue. This could be stuff around travel expense. It could be things around booking meetings, anything that is related to sales, additional cost. So let's say that this will be about 6% of our total revenue. And let's say that this is going to be 6% for the first year, and then it's going to reduce to 5% of revenue going forward in the years. Save and close. And then we are done with affiliate fees, sales and marketing. Then some professional fees. Let's say we pay $2,000 per month for lawyers and accountants. Rent and utilities. Let's say we pay about $5,000 per month for our office and office expenses. And then other expenses we've built here based on the total number of clients, the total number of employees. So we have the other expenses will be equal to the number of employees times some cost per employee. So other total number of employees is automatically calculated. Here we're going to just say it's going to cost us $500 per month per employee to calculate the additional other expenses that we will incur. Save and close, and boom, these are our total expenses already calculated. Now we can go into assets. Go ahead.
One more question, though. Yes. So if you go down and look now at other sale expenses, and are we able, if you click on it, to rename it? Because maybe I want to change the names of the predefined expenses.
Sure, you can. If you enter other expenses, right here is the name. If you want to call this other expenses changed, change, then you click save, well, you click next, and then you click save. Now the name will be changed.
Oh, so I can actually take the predefined model templates and customize it to my needs.
Absolutely. You can name them however you want. You can create formulas, you can delete, add costs, rename, you can do whatever you want. It's extremely flexible.
Cool.
That's it. We've added our total expenses. If we now go into assets quickly, these are our cash balance is automatically calculated. So let's say we want to add some office equipment as an asset. We go into office equipment here, which we had pre-created. This is a long-term type of asset. We assume that we're going to use it for 5 years. The type of asset category is property, plant, equipment. And then there is a question here: is this a one-time purchase? Now, this is usually office equipment for new employees. So the moment you get a new employee, you need to buy them a computer, a desk, and a chair, right? So we're going to say no, we're not. This is not going to be a one-time purchase. We'll click next, and here we've created a formula. We will say number of new employees. So the total asset cost will be the number of new employees times equipment per employee. Yeah. So the number of new employees is automatically calculated, and then we say, for each new employee, we're going to spend $5,000. Click save and close. And this is our assets, our office equipment asset has been automatically calculated for us, and depreciation automatically calculated. Go into funding or into financing. If I click on add financing, there are several different ways to finance your business. You can get loans, you can have a line of credit, other liabilities, shareholder equity. Now, for most startups, you're not gonna have a loan. Well, you might actually have a loan. So let's see. But you're going to be financed usually by shareholders' equity or loans. So let's exit here. We have already a predefined loan. The way to change here, let's say we go into edit and we say, look, we're going to take this loan starting from April 2024. The loan amount is going to be $40,000. We're going to pay it off in 40 months, and we're going to pay 7% annual interest. Our payback, we're going to have 0 grace period, and our payback is going to be monthly. Click next, and your whole loan repayment schedule, amortization schedule, everything is automatically calculated. Let's now say we also want to add a shareholders' equity because we're going to finance this business with equity. We already have a predefined equity investment line there. You go into edit, next. Then we say, okay, in the first year, we're going to put in $500,000 first month. We're going to invest $500,000. Save and close, and then our equity has been put in. That's it on financing. I'm not going to go into more details. Everything is automatically calculated there. We go into taxes. There are 3 types of taxes you can add depending on your jurisdiction. Income tax is usually something that exists in every country. Sales tax is for the US. VAT is more for Europe and other parts of Asia. So for our planning purposes, we have some income tax already created there. If I go into edit of that one, let's say that our income tax rate is 20%. You put that in, click next, and your income tax is automatically calculated. And the final step of the way is working capital. Here, you need to define your accounts receivable, inventory, and accounts payable. Credit sales is the percent of your total sales that you sell on credit terms. Let's say because we are a SaaS business, we charge our clients ahead of time always. So 0% of our sales are going to be on credit terms. Everyone gets paid to us right away. So no changes there. We don't have any inventory. And when it comes to accounts payable, we're going to say about 50% of our expenses, we're going to purchase them on credit, and we pay them, and we pay to our vendors 30 days later. We've implemented that, and that's it. Voila. We have our financial plans ready. This is our P&L, everything automatically calculated from revenue all the way down to net income. If we want to look at this on monthly basis here, but if you click this button here, show monthly, sorry, that was on annual basis. If you click on show monthly, you are able to see your P&L on monthly basis. You want to look at your balance sheet, it's right there, cash flow statement, click on your cash flow statement. Again, full cash flow statement, everything automatically calculated for you. Again, show monthly if you want to look at it on a monthly basis. And then you have your employee schedule chart that you require to sense check the logical, sense check the quality of your financial plan, your revenue, your gross margins, your operating expenses, EBITDA margins, and so on. And because this is a SaaS business, we have a specific dashboard with the KPIs that are specific to a SaaS business. So you go into your SaaS dashboard, and here you can track all the KPIs that you need to track as a SaaS business. Your total bookings for all customers, for new customers, how they develop. You look at your average contract value, how it develops, your average contract duration. You look at your average MRR for new customers and old customers, average ARR, total MRR, total ARR, customers, number of customers at the end of the period. Now, new customers, churn customers, net increasing customers. This is a bar chart, but if you prefer, you can look at it as a line chart as well. You can look at your customer churn rate and MRR churn rate. You look at your lifetime value versus your CAC, your lifetime to CAC ratio, months to recover CAC, lifetime value, not lifetime, but customer lifetime in month, and your revenue per sales and marketing employee. Any KPI that you need to manage your SaaS business is already there for you, automatically calculated.
That is so comprehensive.
That's it, Nick. I think I have finished with the demo.
Really cool.
I think we've built it in 35 minutes. We built a full-fledged professional SaaS financial model in 35 minutes. How long did it take you to build the Modeliks at the beginning, the Modeliks financial model in Excel?
That is a really good question to ask. So just to give you a little bit of background, I used to be in valuation, and so I am quite experienced when it comes to building models in Excel. And it took me, I would say, probably around a month to get it to a version that we actually, could see our first numbers, to sense checking, and then of course with all the changes that we did, probably I think it was at least 1.5 months in when we said no, this is the version that we freeze. So quite some time. Yeah.
Well, there you go. Now you can do it in 30 minutes.
That's crazy.
I hope, guys, this was helpful. I hope this demo was comprehensive enough for you to be able to actually create a financial model in 30 minutes for SaaS company, as we did right here, right now. If you have any comments, please drop them in the comment section below, and you in the next video. Thank you, everyone. Bye.
Thank you. Bye bye.